Have you ever been in a meeting where words like assets and liabilities are flying around and you're just nodding, hoping nobody asks you a direct question? Yeah, we've all been there. Accounting can feel like this secret language for some exclusive club. But here's the thing, it's the language every single business speaks. And today, we're going to crack the code together. So to make this all feel, real, let's meet Raju. He's just graduated college, he's got all this energy, and he has a business idea that he just can't shake. And like any great company, it all starts with that one little spark, that one vision. But here's the thing, a vision is just a dream until you have a plan. And to build that plan, you've got to speak the right language. And no, I'm not talking about French or Spanish. I'm talking about the language of business. And we're going to learn it right here, right now, step by step with Raju. Okay, so what exactly is Raju's big idea? Let's take a closer look at the business he's dreaming of building. So Raju, being a smart guy, has been looking around his local market, and he's spotted a gap. He's realized people want good quality, ready-made shirts, and they're hard to find. So that's it. That's his big idea. He's going to open his own clothing store and fill that need. So you've got the idea. But how do you turn that into, an actual real-life business with a front door and everything? Well, you need resources. And let's be honest, in business, that almost always starts with one thing: money. After sitting down and doing all the math, Roger figures out he needs 20 lakh rupees. That's 2 million just to get this thing off the ground. That's his number, the magic number he absolutely has to hit before he can even think about buying a single shirt. Now he's been saving up and he's managed to put together 2 lakh rupees himself, which is an amazing start. But he's still short, so for the other 1.8 million, he's got to go to a bank and get a loan. And right there in that simple little funding plan, we meet our first two super important accounting terms. Okay, first up, the money an owner personally puts into their own company, that's called capital. You can think of it as their skin in the game. For Raju, his 2 lakh rupees in savings, that's his capital. It's the foundation, the proof that he's serious about this. Now, here's where things get really interesting. From the business's perspective, and you have to imagine the business is its own separate person, it now has obligations. It owes money to people. These are called liabilities. It actually has an internal liability to its owner, Raju, for his capital, and an external liability to the bank for that loan. All right, the money's in the bank. With the full 2 million rupees ready to go, Raju can finally start shopping for his business. And all the things he buys, the stuff the business will own and use to make money, have a special name in this language. They're called assets. And he doesn't waste a second. He spends 30,000 rupees on some nice furniture and display racks. Then he makes the big move. He buys 500 shirts at 400 rupees apiece. Now, both the furniture and those shirts, which we call inventory or stock, are officially assets of his business. So here's the absolute key thing to remember about an asset. It's something that provides value over a longer period of time, for more than just 1 year. That furniture is going to be used for years to come. The inventory is going to be sold to make money in the future. They have lasting value. Now, let's contrast that with an expense. An expense is totally different. It's a cost that gets used up really quickly, usually within the same year, just to keep the lights on and the doors open. We're talking about things like the monthly rent for the shop or the salaries he pays his workers. And this, right here, just nails the difference. An asset is something the business owns for a long-term benefit, like a delivery truck. An expense is the cost of doing business, like the fuel you have to put in that truck. So, simply put, assets are what you have. Expenses are what you spend. Okay, the business is built, the shop looks great, the inventory is all set up, but, a business isn't really a business until a customer walks in. So now it's time for the really exciting part, the first big sale. And he gets off to a fantastic start. A local organization gives him a call. They need to buy 300 shirts for all of their employees. This is exactly the kind of big break he was hoping for. So all the money that comes into the business from this sale, that's called revenue. You might also hear people call it sales or income. It's that big top-line number, the total amount of money he earned before we subtract any of the costs. Let's just run the numbers real quick. He sells 300 shirts, and he sold them for 450 rupees each. You multiply those two, and his revenue from this one deal is 135,000 rupees. Not too shabby at all.
That's a great number for sure. But here's the million-dollar question. Is that the amount he actually gets to keep? Can he just put that in his pocket? Well, not quite. Because to make that money, he had to spend money. He had expenses.
To get the real score, we have to subtract the costs. First, you've got the direct cost of the shirts themselves. He paid 400 rupees for each of those 300 shirts, so that's 120,000 rupees right off the top. Then you have to factor in all the other costs of just running the shop.
And that number you're left with, after all the revenues are counted and all the expenses are paid, that is profit. It's the famous bottom line. It's the ultimate measure of whether a business is actually working, and it's the reward for taking all that risk.
So let's just zoom out for a second and look at the whole scorecard. We've just learned the 5 most important words that tell the financial story of pretty much any business you can think of. And you can really see how it all flows together, can't you? It's a complete story. You start with capital and liabilities to get the money. You use that money to buy assets. You use those assets to generate revenue. You've got expenses along the way. And finally, what's left over is your profit. It all connects. So you might be thinking, okay, that's a cool story for Raju, but I'm not planning on opening a shirt store anytime soon. Why does any of this matter to me? And that is a totally fair question. And here's the big takeaway. This language, it isn't just for big corporations. It's for you. I mean, think about it. The car you drive, that's an asset. The loan you might have on it, that's a liability. Your paycheck is your revenue, and your rent and your groceries are your expenses. When you learn the language of business, you're secretly learning the language of your own personal finances.
Once you get this language down, you can not only look at a company and understand its story, but you can also start to write your own financial story with so much more clarity and purpose. And that really just leaves us with one final crucial question. What story is your money telling?